Lesson 11. Risk appetite. Now this is where things can get a bit complicated. We say there is risk appetite when the economy is doing good and persons are more willing to take risks. Risk aversion is the opposite. This is when the economy is not doing so well, and as a result, persons are not willing to take as much risk. Now this is where it can get tricky. When there is risk appetite, some traders will tend to invest in currencies with higher interest rates. This is, for example, currencies like the Australian dollar or the New Zealand dollar. And this is because their central banks pays more interest. So you might see very good news for the USD, and as a result, the Aussie USD rises. Now this is not something that occurs very often, but there are several occasions where this has taken place. So you have to be careful. If everything is going good and we're getting positive data and there's more risk appetite, sometimes you'll see a rise in the Aussie USD. Okay? But as I said before, this is not something that is very frequent. But it can happen, so it's something that you should know about. So section recap. First, always try to understand the cause or the potential cause of the move using the news sources. Use correlation to help you decipher the potential outcome of a fundamental announcement. Remember, moves caused by changes in market sentiments are temporary, and once the fundamental picture is the same, the market should continue in the same direction. And the key that you should ensure that you remember is that anticipation is key. The market is mainly speculative, so understand what the market is anticipating and you will make lots and lots of money. So in the next section we'll be looking at the 5 major US fundamentals.